Revenue is vanity, profit is sanity, but cash flow is reality. Here's the hard truth. A business can run for years without profit, but not a single day without cash. And believe it or not, many profitable businesses go under because they simply run out of money. That's especially true for fast-growing companies. Scaling quickly sounds great until you realize your cash outflows are outpacing your inflows. So if you want to keep your business alive and healthy, you need to be looking at the one report that tells you the truth about your cash position, the statement of cash flows. Here's how this is going to go. First, I'll break down what the statement of cash flows is and why it matters so much. Then we'll walk through each of the three sections: operating, investing, and financing activities. I'll compare it to the other major financial statements so you can see where it fits in. And we'll talk about why it's especially crucial for certain industries and business models. And we'll wrap it all up with what this means for your business and how to act on it. Let's get into it. Why cash flow tells the real story. The statement of cash flows shows the actual movement of money in and out of your business, not what's booked on paper, but what's really happening in your bank account. It's divided into three core sections: operating activities, investing activities, and financing activities. This report is critical for any business, especially for growing businesses on an accrual basis, because your income statement might show revenue you haven't even collected yet. Cash flow reveals what you've actually received and spent. Why the statement of cash flows matters most for accrual-based businesses. Here's the thing. The statement of cash flows exists to bridge the gap left by accrual accounting. If your business relies on accounts receivable, accounts payable, inventory, or major capital expenditures like equipment purchases or build-outs, your income statement won't tell the full story. You might be showing a profit but bleeding cash because your accounts receivables are piling up and not collected yet. You're stocking up on inventory to prep for sales. You just bought new equipment or spent 6 figures on a leasehold improvement. The statement of cash flow reveals all that. It shows the real impact of those decisions on your liquidity. Balance sheet, P&L, and cash flow. What's the difference? Let's put this in context. There are three major financial statements every business uses. The profit and loss or income statement shows your performance over a period of time. Revenue minus expenses equals net profit. The balance sheet gives you a snapshot. Assets equal liabilities plus equity at a single point in time. The statement of cash flows explains what happens between those snapshots. In a way, it's like a balance sheet in motion, showing how the changes in assets, liabilities, and equity actually impact your cash. The P&L might show profitability, but only the cash flow statement tells you where the money went. Net income is just the starting point. The statement of cash flow starts with net income, the bottom line from your income statement. But net income includes a lot of non-cash stuff such as depreciation, amortization, accrued expenses, and under revenue. That's why we need to make some adjustments to get the real cash generated by operations. So the net income is the starting point, but the next step is just as important. Operating activities equals day-to-day cash. The operating activities section of your statement of cash flows adjusts net income for things that didn't involve actual cash. For instance, you add back depreciation because that's a non-cash expense. Then you subtract out any increases in accounts receivable because that's money that was earned but has not yet been collected. Include changes in payables. Maybe you delayed some payments and held on to cash. Once you finish this section, you get what we call cash from operating activities. That's the amount of cash your business actually generated just from running. At this point, if you run your P&L on an accrual basis, you now have cash basis profit. Investing equals long-term assets in or out. Next, we move on to investing activities. Remember that the financial statements are from the business's perspective, so we're not talking about taking on investors, but rather what the business has invested in. These include big ticket items that impact long-term operations. For instance, buying equipment, vehicles, or property, that's cash out. Selling those same assets, that's cash in. You'll also see cash outflows if you're putting money into long-term investments or subsidiaries. The key here is that these investments are for the future, not for day-to-day operations. Financing equals where the cash comes from or goes back to. Finally, we hit the financing activities. This section shows you how your business raises capital or returns it. Take out loans or lines of credit, cash in. Pay down debt, cash out. Issuing stock or bringing in investors, that's cash in. Paying dividends or distributions, that's going to be cash out. Financing tells you the story of how your business is funded and whether you're growing sustainably. The full picture. So why split it up? Because each section tells a different story. Operating is the health of your business on a day-to-day basis. Investing, how you're going to build the business. Financing, how you're funding future growth. Understanding these differences help you make smarter decisions. You can't fix cash problems simply by looking at your P&L. You need the statement of cash flows to diagnose and manage your liquidity. Track your cash, not just profits. If you're only watching revenue or net profit, you're missing the point. Your business runs on cash, not promises, and not book sales. Use your statement of cash flows to spot cash leaks, forecast crunch periods, make more confident decisions. If you're a business owner and want help understanding your financials and not just filing taxes, we can help. Reach out at www.tandvllp.com/accounting. Let's get your cash flow under control. Thanks for watching.